Anyone can be financially set for retirement if they own just 3 homes. Hey everyone, I'm Curtis Chism with the Chism Team, brokered by eXp Realty. And in this video, you're going to discover how you can take your first steps to become financially free through home ownership. Becoming wealthy is a goal that many people strive to achieve, along with a stable source of income well into retirement. But for many people, this just seems so elusive and out of reach. However, I'm going to show you an example of how you can purchase your first home and then 2 more properties to generate enough income for you to retire on without worrying about where your income is going to come from. So owning your own home has some amazing benefits, as well as including building equity over time as you both pay down your mortgage and the home gains value or appreciates over time. You also get the stability of a fixed mortgage payment instead of worrying about when your landlord is going to raise rents. You also get to write off your mortgage interest and your property taxes on your income, saving you thousands of dollars in taxes each year. Owning rental properties has additional benefits, such as being able to depreciate the property over time. Depreciation is a paper loss that the government allows you to claim against your income and can save you thousands in taxes each year as well. Third, the tenant will actually be paying off your mortgage for you, and you'll have cash flow providing you with income. Now, there are of course risks associated with owning multiple properties, but it is a surefire way to make yourself financially free. There are a number of ways to leverage the equity in your home to make buying investment properties easier, such as a home equity line of credit. Let's take a look at an example of how owning 3 properties can generate enough income for someone to retire on, assuming an interest rate of 5%. The interest rates may be higher today, but we'll just assume this is a long-term average. And the way to accomplish this is, again, buying 3 homes. Now, there's many loan products that allow you to buy a home for much less money, which I do cover in other videos. Now, for the purposes of this example, we'll assume that the primary residence is worth $500,000 and each rental is worth $300,000. We'll also assume that each rental property generates $1,500 in monthly rent. Now, I realize these numbers might be a little low, but so is the corresponding rental income. So with higher priced homes, the rental income will all be higher too. Now, if the primary residence has a 30-year mortgage with a 5% interest rate and a $400,000 loan balance, the monthly mortgage payment with taxes and insurance would be about $2,147. Over time, the mortgage is paid down and the property appreciates. The equity in the home will increase. If the property appreciates at a conservative rate of 3% per year, it'll be worth approximately $1.2 million in 30 years. Now, let's take a look at the rental properties. Assuming you purchase 2 properties over the next several years, and those rental properties also have a 5% interest rate with a $200,000 loan balance, the monthly mortgage payment, including taxes and insurance, would be a little over $1,300, generating $1,500 a month in rent. You would have $176 a month, or combined for the 2, $352 per month, $4,200 per year. But keep in mind, your monthly income will rise each year as you raise rents. And I'll cover that in a minute. Now, of course, you do need to set aside funds for home improvements as well. Now, over time, as the mortgage is paid down and the property appreciates, again, the equity will increase as well. If you use a very conservative rate of 3% per year, it'll be worth approximately $728,000 in 30 years, combined for $1.5 million, and the combined value of all 3 properties over $2.65 million. Now, of course, the rents will rise as well. So if you just raise rents a conservative 3% per year, your monthly income per property would be $3,600 per month, or combined for a little over $7,200 per month. And you won't have a mortgage because your tenants pay that off for you. Now, when you retire, you'll have 3 properties that you own outright for $2.65 million, generating $7,200 a month conservatively. Now, you could easily sell those properties off and have a couple $1,000,000 in your bank account, or keep collecting rent checks. So as you can see, with just 3 homes, you can retire financially free with millions of dollars in assets. So when you're ready to buy your first home or continue building your real estate portfolio and invest in the next rental property, hit me up via phone, text, or email, and let's create a personal plan for you to buy real estate.